Hey traders, Jason here from Leavitt Brothers. Today I'm going to talk about entering and exiting trades with a few simple signals. Nothing hard, nothing complex. I don't brag about using any special proprietary indicators. Everything I use is standard stuff that's available in all charting platforms. And everything I'm going to talk about here in this video is discussed in detail in my Masterclass, which is available at a link below this video. Alright, so let's get to it. I'm going to show you 5 different stocks, each with an hourly time frame. I'll show you the entries and I'll show you the exits and I'll talk through them. Okay, so here is BNGO. Okay, it had rallied up a bunch, and again, this is the hourly time frame. It had rallied up a bunch and then it had pulled back, and this is what I saw playing out. So first we have a breakout on the stochastics. We have MACD here, we have the stochastic down here. So we have a breakout with the stochastic. Okay, with a declining price. Okay, this is something I talk about in my Masterclass. I draw trend lines on the stochastic chart, and you can see the stock moved up, got rejected by its 50, came down, found support at its 21, moved up, found support at its 21, and just continued up. You can see support at the 21, support at the 21. The 21 is the orange line. Support at the 21, support at the 21, and then finally it took out support at the 21. So it had moved up to a previous key level here, okay, because there was like support over here. It was a support on the way down, so it had moved up, so it retraced that entire drop, and the stochastic took out a trend line, and the stock took out its 21 period moving average, which had supported the stock. So you get an entry over here when the stochastic breaks out, okay, and if you don't get in there, then you can get an entry over here when the 21 supports it, and then the 21 supports it along the way, and then you get an exit when it fails to, when it struggles in the area of the previous key level plus the previous high here and here, and then it takes out its 21. Pretty simple step-by-step stuff. All right, CLNE. Okay, so first thing you notice, so the stock dropped. Okay, it had done really well on the way up, then it was undergoing a correction. You get a breakout with the stochastic over here, and then what you get a sequence that I look for all the time on different time frames. I talk about this in the Masterclass. You get a move up here, which causes the MACD to cross up there, and it also, and obviously the stochastic moves up there. Then you get a move down, but the move down lacks downside energy, so the MACD simply comes down and kisses and then starts to move up, and at the same time it comes down and kisses, the stochastic cycles down and then goes back up. So you get a kiss right here and you get a cross right here, and it plays out at the same time. You get like a double bottom. Stock moves up, comes down, finds support at its 21, moves up, finds support at its 21, and then continues up here, and then takes out its 21. And if I back this chart up a little bit, you can see that the stock had not only had it just come up, it's not a random level, but this level here at 16 was a key level. Okay, because it supported the stock here, support here, resistance here. So we got a kiss and cross at the bottom. It rode its 21 up, and then it touched up at a previous high, which was also a previous low, and then it struggled. So on that big downside candle right there, there is definitely an exit there. Okay, next one is GEVO. Okay, another stock that we played on the way up, gave us some good profits. Then it was undergoing a pretty stiff correction, and then it started to bounce. All right, so this is how things played out. So first of all, you have a little bit of a positive divergence. Price is going down. Stochastic starts to go up. Then you get a kiss and cross setup where the stock moves up and then comes back down. The MACD crosses up, but then it doesn't really cross down. It just kind of moves back down toward the signal line, and at the same time the stochastic moves up and then cycles down. So you get a kiss over here where the two lines come together and then move apart. You get a cross here, and this coincides with a little bit of a like a W shape pattern. So the stock then moves up, comes back down, gets support from both its 50 and 21, moves up again, gets support here, and then it finally takes out support over here. And you can see that the stock had moved up to a previous high. Okay, so you get a kiss and cross at the bottom, you get a move to a previous high, which is definitely a reason to move a stop closer, and then the stock eventually pulls back and falls off its 8 and its 21. So not a bad play off the bottom. MVIS, okay, another stock that we played on the way up, gave us a huge gain here, and then it with a lot of the so-called small cap, disruptive growth stocks. I don't know if this stock qualifies, but it certainly acted like it was. It then got cut in half. So what I saw here on the way up is you have a breakout on this from the stochastic. Again, I talk about this in my masterclass, that I draw trend lines on the stochastic, and you can often get signals when those trend lines are broken. So you get a trend line break. The stock had moved down, it moves up, you get a trend line break, comes back down. At the same time, you get the MACD crosses up, comes down and kisses, and then starts to move off. And at the same time this happens, the stochastic cycles up, cycles down, and then reasserts. So you get a kiss over here, you get a cross over here. At the same time, the stock traces out this type of pattern, and you can see once the stock gets above the 21, it rides its 21 up here, finds some support there. Although once you start to get up here, you have a previous high here, you have a previous high here, not including the gap up there. So the stock had rallied, you get a nice bottoming pattern, stock nice and calmly rides its 21 up here, it comes up to a previous high, which is a reason to move your stop closer, and then it just falls off and eventually takes out its 21. Okay, last chart, NNDM. All right, so you got a positive divergence with the stochastic. We got higher highs, higher lows there. You get the stock putting in lower highs there. Then we get another kiss and cross setup where the stock moves down, moves up, moves down. And the MACD crosses up, comes back down, and then starts to move up. And the stochastic moves up, comes down, and then moves up. So you get a kiss over here. You get a cross over here. We get some support from the 21 there, the 21 there, the 21 there, and then the 21 there. Okay, and then eventually the stock takes out its 21, and you got to sell it. Okay, so really strong stock several weeks ago, turned weak, gave back half its profit, but then we got a nice bottoming pattern. We get to ride its 21 up for a few days, and then you sell and take your profits when you're supposed to. Okay, nothing. As I said, nothing's complex. It's pretty simple. Nothing's really hard. The setups are pretty easy, but it does take some practice to get good. But the setups are pretty simple. All right, that's it for now. Thanks for watching, and I will see you next time.